Hello everyone. Today we're going to have a brief market recap, then talk about the upcoming U.S. durable goods figures, the pending home sales, and Japan inflation data. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my North American opening market comment. The dollar was mixed at midday in Europe. Sterling was a feature. It rallied after the third quarter GDP beat estimates handily. GDP rose 0.5% quarter-on-quarter instead of 0.3% quarter-on-quarter as expected. The annual rate of change was even higher than in the second quarter, despite the Brexit vote. Actually, I would have expected the pound to gain more on such good news. The market's been re-evaluating the likely course of British interest rates. As you can see from the graph, a month ago, the market was pricing in a chance of at least 10 basis points further easing over the next 2 years. But now, investors expect the Bank of England to keep rates steady. As inflation starts to rise in the UK, we could start to see the expected timing of the first rate hike be brought forward, increasing the support for the pound. As for the rest of the indicators coming out today, U.S. durable goods orders are expected to be weak, but they've been weak for several years now. The figures do still impact the FX market nonetheless. Weak data like this, with no increase in durable goods orders and a decline in the crucial non-defense capital goods, excluding aircraft sector, suggests that companies are getting pessimistic and putting investment plans on hold. That's why I think the news could be negative for the dollar. Pending home sales are expected to be up slightly, which could offset some of the disappointment from yesterday's weak new home sales data. That would be positive for the dollar. Then later tonight, overnight, Thursday and Friday in Japan, Japan has a lot of different CPI measures. The national CPI, the Tokyo CPI, CPI with or without food, with or without fresh food and energy, and they even have one from the Bank of England that excludes fresh food, energy, and taxes. Unfortunately, no matter how you measure it, the result is pretty much the same. Japan's inflation rate is still either stable or falling. Nonetheless, very few people expect the Bank of Japan to make any changes in policy at its meeting next week, as the policy board evaluates their new approach to managing the Japanese government bond yield curve. Therefore, another disappointing CPI figure might not have much of an impact on the currency. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.